Some of the biggest investing opportunities this year could come from the so-called frontier markets, stocks in countries that are riskier than the broader world of emerging markets. The MSCI index of frontier markets is up 20% from a year ago, and Citi's strategists say there is still room to grow. Andrew Howell is a Citigroup analyst focusing on emerging and frontier markets. He joins us from London in what is the afternoon there. Andrew, in looking at your research, it's a surprising statistic here. You say 8 out of the top 10 best performing markets so far in what's a young year are the frontiers. And we looked at some of these countries. I think we can put up the screen for you just to take us all around the world. Some of these names aren't in your everyday basket of emerging market. I mean, you've got Mongolia up like 23%, Serbia. You've got a lot of sort of countries on the periphery. Where are you feeling good about putting money right now?
Well, it's true. These are kind of very far-flung places, not usually the types of markets that you're used to hearing a lot about as a global investor. But the fact is, these types of smaller markets do tend to do quite well at the phase we are right now in the global equity market recovery. So we're just entering year 3, really, of this bull market. And that tends to be the time when these smaller, less liquid markets historically have tended to do better. And the reason for that is twofold. Firstly, investors become a bit more comfortable taking liquidity risk, because one of the biggest issues you have investing in a place like Mongolia or, say, Argentina or Kazakhstan is they're just less liquid, and you're not as sure that you're going to be able to sell very quickly if things tend to go downhill. Therefore, you like to see a bit more liquidity and a bit more comfort with that. The other thing is that, these markets offer a lot of growth. I mean, they're much less developed. Over time, you expect a lot of growth over the long term. But this is the sort of time when investors are more willing, I think, to pay a higher premium for that growth potential. So there are really there's a lot more interest now than we've seen over the last few years in these type of markets.
Right. You're right. Total inflows into frontier funds was $2 billion in 2010. So it seems like it's getting easier to buy and it's getting easier to sell some of these frontier markets.
No, that's right. That's one of the key constraints I think that investors have tended to face over the cycle. So as that improves, people can become a bit more comfortable. Then you can really see a virtuous cycle start to form. Now, it's true these are still quite high-risk places. As you mentioned, in Tunisia, you've had a major political change there. And so you still need to be quite agile and careful. You can't just buy everything in the index. You need to take a careful look. But the fact is there are a number of very exciting markets right now which are doing quite well.
But with so many of those emerging markets that we ran through, Mongolia in particular, it seems like a good part of their growth story is dependent on China continuing along at a steady pace. When you see the Chinese government trying to tap the brakes a little bit and perhaps pull back a little, does that worry you about the potential for growth for some of these countries?
Well, there's no doubt that they are a play on a few different things. One of them certainly is, let's say, global growth, whether that's in China or elsewhere. There's no doubt that many of these countries are exporters of commodities. Many of them are exporters of oil. In the case of Mongolia, it's a lot of things like copper and coal. You have a lot of agricultural commodities coming out of parts of Africa. And so if the global commodity cycle really takes a sharp turn downward once again, that's going to be a challenge, just as it was back in 2008, 2009 for these countries. But beyond that, there's also a big play to be had in many of these countries on the domestic local economy, rather. So that's consumption coming from very low levels, starting to improve, and also infrastructure, which is incredibly underinvested in many of these countries.
All right, so give us some of these names. I know you like the Nigerian banking sector in particular.
Well, that's right. I think that Nigeria is a very interesting one. It's potentially a very large market. It's still very small. That's had a lot of volatility in the past. But right now we're looking at potentially more stable political outlook with elections coming, as well as a lot of reforms in the banking sector, which make us quite encouraged that you're going to see stable growth for a number of years there, and you're not paying a whole lot in terms of valuations for getting exposure to that sector. Another area that we like a lot right now is Kazakhstan. I mean, here's a market which was hit very hard early on in the crisis back in 2006, 2007, but where once again high oil prices are quite helpful, and you're seeing a comeback taking place both in terms of the energy sector but also in the banking sector as well. Some of the other markets we like would be places like Argentina, and as well some of the frontier European countries, which have also been quite hard hit and are starting to see something of recovery there as well.
Now, the other side to the commodity boom story is the cost of goods going up for consumers themselves. Food prices up, nearly 30%, according to the UN, over the past year. Doesn't that hurt that potential consumer you're betting on?
Well, it's a mixed result, actually, because many of these countries are actual net exporters of commodities and of food commodities, as I mentioned. So in a way, a country, say in Africa, if you're talking about Nigeria or like a Kenya, could be a net beneficiary. But it's true that higher food prices do make people unhappy. They take away from their purchasing power for other goods and services, but also could potentially, send them to protest out into the streets, and that can create a period of uncertainty. Overall, however, we don't think we're looking at a dramatic worsening right now of these pressures. And if you look actually at most inflation measures, they're not too bad for most of the countries in the frontier space, actually much more benign than in some of the more developed emerging markets. So we wouldn't worry too much about that right now.
All right, Andrew, thanks for joining us.